simple as possible, and as quick as possible, because I know sitting through long videos just is a pain in the ass. So, simply put, the first thing we're going to go over is the ultimate indicator. This is the exact script on TradingView. So you would search the ultimate indicator at Justin Perez Trades, and this exact indicator will come up. Just so that you know you have the right one. It's got about 1,600 views, and about 105 people have boosted it and are currently using it. Pretty much, what is it, right? It goes over smart money concepts. It has an HTF PO3 candle. It has an opening range breakouts and targets. Then it also has a volume candles built inside. And essentially, this here, I won't read through all of it, but you can go ahead and read through it. It explains a little bit more about it. So let's close this up and let's go over how I read this thing, right? So the very first thing that I'm looking for is the 1 minute time frame. Then I'm looking at the 5 minute time frame, the 10 minute, the 15, all the way up to the 30, and sometimes I even use the 1, right? Now, how I'm looking at this is I want to see where each 50 EMA is on every time frame. So the first thing I do is I open up my 1 minute and I mark that EMA, and I'll change the color here. So that's the first one. That's the 1 minute. On the 5, and we just keep doing this all the way through on each time frame. And as you can see, the 5 and the 10 minute are almost identical. The 15 is just slightly lower. The 30 minute is just slightly lower, and the 1 hour is right around here. So now we have them all marked out, right? So just to kind of go over that again, our 1 minute is right here. So we'll mark this as the 1. Our 5 and our 10 minute are right up here. So we'll mark this as the 5 and the 10. Right? The 10's right there as well. The 15 minute is just slightly below it. So we'll mark this the 15. The 30 is right there. Mark that the 30. And then our 1 hour is right there. All right? So actually, let me do 1 hour. Cool. So now we've identified where the 50 EMA is on all those time frames, right? Now, a couple different things that we're looking at. We're going to be looking at the delta, whether it's positive or negative, and this is going to tell us if the bullish or bearish candle is volatile enough. Now, in the 1 minute time frame, what you want to see is a candle that has over 700 positive or negative delta. In the 5 minute, you want to see at least 17, 15, 2000 positive and negative. On the 10, you want to see at least 23. On the 15, you're going to want to see anywhere above 47 to 5,000. On the 30, you're also going to want to see around 10 to 15,000. And on the 1 hour, you're going to want to see around 30,000. Now, granted, the reason it looks so low right now is because this is the overnight session for Tokyo, Asia market. But during a New York Stock Exchange, these numbers will increase drastically. Now, you need that because that's going to give you the power to run through these EMAs or continue to catch volatility to the downside. Now, on an overall, what we're looking at in these areas up here, right? So smart money concepts is based off of a premium, an equilibrium, and a discount zone, right? And what we're looking at is what is our range on each one of these time frames, right? So for instance, on the 1 minute, our premium price is around 121, our equilibrium is around 985, and our discount zone is around 866. So that's our range right here on the 1 minute, right? And so on and so forth. You're going to identify each one of those levels. The next thing that you want to look at is, depending where you are on these areas, that's going to be the direction in which you want to trade in. So for instance, what I mean by that is if you are coming into premium, then you're looking to short it through the 1 minute, the 5 minute, the 10 minute, and the 15 minute is usually where you're going to pivot or get the continuation into discount zone, right? And essentially what I mean by that is you want to see that when you're at premium, you're getting exhausted on the 1 minute, right? So let's kind of pull that up here and see if it kind of matches up, right? So let's fix this here. Where's premium? Okay, there it is. So this is kind of what you want to see here. So what you want to see is that you go into premium and that you're about I'd say about 20 to 30 to 50 points, right? Anything above that, even better. But you want to see at least 30 points of a spread when you're at premium to come back into that 1 minute time frames 50 EMA. Now, you would want realistically the 1 EMA, for example, to be there, the 5 to follow, the 10 to follow, the 15 and the 30 pretty close to it, right? You would kind of want something like that, right? And the reason being is because what you want to do is you want to catch the short off of premium to catch it right back into the 5 to the I'm sorry, you want to catch it into the 1 to the 5 to the 10 to the 15, and then at the 15 you want to look for a retest, or I'm sorry, a break and a retest in either direction. And what I mean by that is, let's say we're going into the 15, right? We want to see if we can blow through the level and on the retest hold to continue down, or we want to see if we bounced it, create a higher low, and then either bounce the level again, create a higher low, and then hold to then continue to the upside, or just one bounce. So it would look something like this, right? So you'd be looking for that higher low for the entry on the reversal. Or sometimes what can happen is you will come in, you will go back above, and then you get your retest. And then every now and then you'll also get the above, or I'm sorry, below, above, and then the hold back up to the upside. And what you're looking for is to allow this move to happen in any one of those scenarios, and your entry is always going to be off that 15, or I'm sorry, off that 30, between that 30 and that 15-minute entry. Because no matter what, this is the level that you're keeping an eye on, whether you break through it or if you're reversing, because you're looking for the retest of that level, whether it comes through, retest, then you enter for the downside, or breakthrough, it breaks out, then it retests for the continuation. So no matter what, this is going to be your entry to the downside or the upside, but what you're looking for is the next pattern's entry. That's it, right? Now, for instance, on a take profit, right? What would you be looking to take profit? So what you would be looking to do from premium is to take that short into equilibrium, right? Now, let's say, like how I just explained those retests, right? When you're coming into equilibrium, if you bounce, hold, and go back up, if you come through, hold, and come back down, or sometimes you will see it come through, go higher, come back down, and then re-enter. But no matter what, you're always going to get that retest off that level when you're coming into it. And then vice versa. Let's say you're coming from discount into that level, then it's the same thing to the opposite side. But what the reason that you're looking for that is because as you're coming into this level, if comes back down and holds, then you can continue with your trade. But if it comes back in and does that, then you know to take profit on your trade if you hadn't already taken profit. Now, same thing with the discount zone, right? Just opposite, right? So think about it like this. Let's clear all this out. So if we were looking for the 5, right? Let's say this was the 1 minute, right? Right here, the 5 minute here, 10 minute, 15, 30 to go on shorts, right? Then what we're looking for on the opposite spectrum is if we're coming up from discount back up, then we're looking for the 1, the 5, the 10, 15, and 30. Same thing, just in the opposite direction. Now, that's pretty much the overall trade, right? Now, that's how we're looking for the entries, and that's how we're managing the trades on the exits. What we're going to also keep our eye on is the break of structures and change of characters, because that's how we're going to know when we're ready to actually make the move. Now, another indication that I like to use is the equal highs or the equal lows. And what I mean by that is price will actually make an equal high, and the indicator will automatically pretty much alert you of that. So the moment that you see the equal highs, then you know that the move is going to start to be formed here. Doesn't mean it's already right at that moment, but you know you can now start paying attention, because what will happen is sometimes you will create that equal high, and then you start to create lower highs, or you will see a fake out, and then you will see the return, and then the entry back to the downside. And again, that equal high would have been your entry. You just had to wait and be patient for the confirmation. Now, same thing with the equal lows. So let's say we can find an equal low here somewhere. Do we have any equal lows? We don't have any equal lows on this side. Let's see if we can find something over here. Okay, so here's an equal low. Same thing, just opposite direction. So price creates a double bottom, goes back into the 1 minute, rejects. Price tries to come back down to break, creates the equal low. And then what you want to look for is if it's going to fake out on the next candle, right? If it doesn't, then you're ready for your trade. What you can essentially do is wait for one of these retests and catch the trade to the upside. Or you can wait for it to go back into the 1 minute, see how it wants to act, see if it wants to hold, or if it actually starts to reject. Because if it starts to reject, then that's when your move is about to start heading for you, right? Now, a change of character means that the price is literally changing that, right? It's changing its sentiment, it's changing its direction. So, for instance, here, we got the bounce here on this break of structure, and we came back up and created a change of character. Why? Because we were coming down on these breaks of structure, but price picked up and turned around back into the opposite way. So change of characters can happen bullish and they can happen bearish. It just means that the chart has now changed characters, changed sentiment, and it's heading in the other direction. The break of structure means that when you're coming down, you're breaking a previous structure's low or its high. So for instance, here, it created a break of structure because it broke this structure over here. Here, created the change of character, retested, and it broke the structure from here, right? So it went back up. Now, another thing that you're going to be looking for is your orb. Now, I don't have a specific orb that I like to look at. I just like to keep my, I would say the 15 and the 30 is your overall stronger one, but I like to look at all of them. I don't like to not include the every single times orb or time frames orb. So always check out your orbs, and the reason being is because on orbs, what you are looking for is, let's say you're trading within orb, or whoops, let's say you're trading within orb, right? You're range trading within the orb. What you're looking for on this orb is eventually a breakout, a retest. That's your entry to the downside. This would be your entry, right? And then vice versa. If you're trading within here, then what you're looking for is a break, retest. That's your entry to the upside. Now, if you want better confirmation of it, you can always wait for the break, the retest hold, the break the structure, and then you catch the second form of it back up to the upside, and vice versa. So this would now be your entry right here on this second test of the break of structure, right? So I know a lot of people always ask me, is it too late to make the move? Well, this is how you're gonna know if it's too late or just wait for the next one. Because if it broke out, created a break of structure, then you're gonna wait for the retest to put your entry point at that break of structure to continue to the upside. And always remember, make sure you're watching if it's a break of structure or a change of character. And then same thing happens. Literally every single form is just opposite. So if it's this way, then that's your entry to the downside. If not, break. If you miss that one, that's your entry, right? But if you miss it, then this would now be your entry to the downside. Now, another thing is you want to make sure that you're constantly understanding what your previous day, week, high, and low is, right? So here on the smart money concepts, it's going to continuously mark that down for you. So if I go to a higher time frame, let's just say, you're going to notice there's a previous month high, a previous day high, previous week high, a previous day low, previous week low, and so on and so on and so on and so on and so forth. And the reason you want to know that is because those are very volatile areas. Those are pivot points in the charts that sometimes you can even take swing trades on if you're on higher time frames. So those are very important areas. Now, to go back to this HTFPO3 candle, which is this candle right here, it's going to mark your hourly. I have it set to the hourly, right? So no matter what chart or what time frame I'm on, it's going to show me an hourly time frames candle on the chart. And pretty much what it's doing is it's showing me where the high, right, the open of the candle, and the current close of the candle, and its low. So the low, where it's currently trying to close, the open of the candle, and the high. And the open could be down here, it could be over here, the close could be anywhere around here, but you always want the high, the low, where it's currently trading, and where it opened from. So that's very important too, because that's going to give you sentiment as to what direction you're going to in a longer time frame, right? Now, another thing that you want to always keep an eye on are your higher lows, your lower lows, your lower highs, and your higher highs. So there's a higher high up here, higher low here, lower low here, and a higher low here, higher or lower low here. Okay, so high, higher low, lower low, lower high. So you always want those points of entry because those are going to give you nice clean trades. That's going to show you where price is pretty much trading in every single time. If you actually draw it across the chart, you can see how they kind of start to form out together. So just to recap again, what you're going to do is look for that specifically, right? So right now, is there a trade, right? As we're looking at this chart. Well, let's see if every time frame aligns perfectly how we want it to align to take that trade. So right now, on the 1 minute time frame, the 50 EMA is right there. The 5 minute is way up here. The 10 minute is just above it. The 15 is in between. And the 30 is below the 5, 10, and 15. On the 1 hour, it is also below. So right now, that does not give us the confluence in trade that we're looking for, right? Because what we're looking for would be a 5, 10, 15, 30, a 1, 5, 10, 15, and a 30. Pretty much just like that. You want these spread out pretty nice. But you want the 30 to be hugged up to the 15, because that's where you're going to get that nice move. Now, that move is usually like if the candles were trading, let's say we were like down here, that's going to be where you want to catch the exhaustion. So once you see that you break and hold from that lower low, you want to catch the trade down, and you want to see that you're retesting and holding each level, right? Now, what happens if you come into it and then you reject? Trade's invalid. Get out, right? And don't wait for it to come all the way back here. 50% of the way back into that 1 minute. If you see you're not breaking through, you close the trade because it's not validated yet, or something's going on, right? And let's just say you go into this, and then it does this, right? And then you come into the 10-minute, let's just say, and then you start to consolidate. That's okay. There's nothing wrong with that. But what you don't want to do is start to reject the levels, because then that's how you know that you could be catching yourself in a position where it's going to reverse on you. So once you see that it starts to reverse on you on any of these levels, close the trade, look for the next one. All right. And you do that for either direction. It's the same thing, just in the opposite direction. So if it was 1, 5, 10, 15, 30, then it would be 1, 5, 10, 15, 30. All right, guys. So that's pretty much the overall strategy, explained pretty quickly and efficiently. Now let's go over the current settings that I have on the chart. So I'll just speed through this, and you guys can pause it to make sure everything's all set up properly. All right, guys. Now, that's pretty much the strategy. All you need is one indicator, guys. I trade this same strategy every single day on live. So you'll see me trade it in real time. You'll have access to asking me questions in the Discord or even on live. And over time, it will make sense. Another thing really quick, I didn't go over what all these numbers are. These are just orb targets. So once you break out of your orb, whether it's to the upside or the downside, the orb is going to start calculating automatic targets for you to take profits. So how you read that, before I let you go, is you pretty much are just looking for each target's line. Now I kind of have mine dimmed out here, so can't really see them because it looks just a cleaner chart. But this would actually create a line across your chart as well. So for instance, this 25, this 27, this 28, 29, 30, they would have lines like this. And what it's pretty much telling you is, as you're moving through price, you just want to make sure that you're holding those levels on any retest. It might even go like this, but what you want to see is that you're holding that last target's pressure. Because if not, then if you're not holding that, then what could happen is you could pretty much do something like this. Let's just say if it goes up, right? And then let's say it comes back down, then it can start coming back down on you. So that's how you read that. But besides that, guys, that is pretty much the strategy, as quick as possible, in the most efficient way of explaining it. And that's how you would catch. That's how your entries, your stop losses should always be no more than $280, $250, guys. However you get that number, make sure that you're sizing right on your contracts. Give yourself some breathing room. Size less on contracts, right? Don't go too deep on contracts. Allow yourself to be able to survive your retest. And how you make sure that that it's the right trade. Well, if the move is already made, don't go chasing the play. Just wait for the next move where those 1, 5, 10, 15, and 30, 50 EMAs line up. They will line up, and when they do, and if you're at a premium or a discount area, that's going to be your massive moves. That's going to be your continuation. That's how you're going to get into trades, guys. Any other questions on that? Just reach out to me, guys. I trade this strategy every single day. It works every single day. You guys see me do it live. So, just practice it, paper trade it until you really fully understand it. And time to print some money, guys.